Hello there. Topic of this video is about the IS-40, which is International Accounting Standard 40s. That prescribes accounting treatment for investment property. Investment property is a property held to earn rental income or for capital appreciation or both. This is not an owner-occupied property which comes under the IS-16 and not used in production or supply of goods or services or for administration, and not held for sale in ordinary course of business. The objective of IS-40 is to prescribe the accounting treatment for investment property. This describes recognition, measurement, representation, disclosure of assets held to earn rentals and capital appreciation, which comes under the umbrella of IS-40. IS-40, as I said, IS-40 deals with the recognition of investment property. IS-40 requires that an asset, when it is probable that future economic benefits associated with the asset will flow to the entity, and the cost of the asset measured reliably. The cost of investment property includes obviously the purchase price and some additions like the import duties and non-refundable purchase taxes, any directly attributable costs of bringing the asset to its working location and condition, and the initial estimate of the costs of dismantling, if any, and removing the asset. The second point that IS-40 deals with is IS-40 requires investment property to be measured either at cost or at fair value. The cost model is used when the fair value of investment property cannot be reliably measured. So the fair value model is used when the fair value of the investment property can be measured reliably. When the cost model is used, investment property is carried at its original cost, less accumulated depreciation and any accumulated impairment loss. But when the fair value model is used, investment property is carried at its fair value at the end of each reporting period. Any changes in fair value are recognized in profit and loss in the period in which they occur. IS-40 also specifies presentation and disclosure requirement for investment property. Investment property must be presented separately from other assets in the balance sheet. The disclosures required by IS-40 include carrying amount of investment property, methods used to measure the investment property, and the fair value of investment property when the fair value model is used. So IS-40 is a very important standard for accounting of investment property. As I already discussed, that it provides guidance basically for recognition, measurement, and of course for presentation and disclosure in financial statements of the entity about the property that is held for rental use or capital appreciation. So let me conclude what we have learned about the IS-40. IS-40 basically tells that investment property must be recognized as an asset when it is probable that its future benefits will flow to the entity. Second point is in cost of investment property includes some components like purchase price, direct and other directly incremental costs like import duties and other direct taxes, and other non-refundable taxes or costs, and also the cost for dismantling and removing the asset when at the end of the life of the asset. And the third one is investment property is measured either at cost or at fair value. These and also IS 40 provides about the presentation and disclosure requirements of the IS 40 investment properties. So that's all for today's video. We will meet in next video. Thank you. Do not forget to subscribe. Thank you so much.